For most people, buying a home is part of the American dream. But it's turned ugly for some people who bought their house with a so-called subprime loan, loans made to borrowers who didn't qualify for loans from traditional lenders. Joining us now with more is Sun-Times financial columnist Terry Savage. Terry, welcome back to Chicago Tonight.
Glad to be back, Phil.
Terry, we've looked at this issue recently, but the story persists. And first of all, a bit of definition. What exactly is a subprime loan?
Well, subprime loans are made by some of the largest lenders. And my column today in the Chicago Sun-Times, I was trying to point out the difference between subprime loans and subprime borrowers. Actually, it is that the borrower's credit history is not good enough or long enough, or they may not have enough money for a down payment. And so these loans carry an extra element of risk and are priced that way. That is, they carry higher interest rates.
So that's the payoff for the people who make them. They can make more off of risky borrowers, basically.
Absolutely. They charge more. It's like junk bonds. But the fact is that some of these subprime loans were structured in such a way, I'm not sure that the people who were going, oh my goodness, I can really own my own home for less than I'm paying in rent. I have the American dream. I'm not terribly sure they all understood the way these loans worked, and that's part of what's coming home to roost.
And how did the loans work in a way that's now coming home to roost?
Well, those low affordable payments were interest-only payments in many cases. And as the Federal Reserve started raising interest rates over the last couple of years, or because those low rates were just teaser rates, the interest rate went up, the monthly payment went up 20, 40, 50%, even doubled. And the people who took out those mortgage loans weren't prepared. They didn't have the budget. Of course, many of them didn't have secure jobs. They'd lose a job. One member of the family would lose a job, and they couldn't make the payments.
And is that what's happening now? Is that the problem, that a lot of people can't make the payments and these loans are going belly up?
You know, it's interesting. We have the best, strongest economy. We saw the lowest unemployment figures in ages, so it's not really that. It's just primarily the rising interest rates and the fact that people, you know, subprime loans per se would be okay, but I think there was a lot of fraud, and I think we'll see it uncovered, that a lot of the people that took out these loans either didn't understand the terms or didn't really qualify based on income, didn't really have any credit at all. So there was all of this thrown into the same bag as rates started to rise. You see rising delinquencies, rising foreclosures. And, you know, by the way,
so for a lot of people who took out these loans, that period, that grace period, or whatever you want to call it, for a couple, 3 years, that's over. All of a sudden,
maybe 6 months or so was over.
So all of a sudden now they're looking at these
payments.
Okay.
There are many loans in the first few months where they can't make the payments. Now, it's not, by the way, the big lenders so much, but around the country there were a lot of unregistered mortgage brokers who got paid fees. I didn't want to dump on the whole mortgage lending industry. There were a lot of unscrupulous brokers that got paid fees for bringing in these loans, falsifying the records. Then the loans were packaged up and sold to other larger lenders who then securitized them and sold parts of them to investors and got fees for collecting.
It sounds like what you're saying is there was a chain of people who made a lot of money going
all
up
the way
and
around.
up and up
a
and
lot
up.
of greed.
So these loans were not, I mean, they may have been sort of overreaching and taking advantage of people's maybe lack of misunderstanding, but were they illegal?
No, the loans themselves were not illegal. They were risky. And the fact is that now those risks are coming home as interest rates start to rise. And it's impacting more than just the people. It's sad enough when you see people, not the fraudulent ones, but the people who really thought they were going to get their home and be able to keep it. That's sad. But what's going on is it's spreading. I was in at a futures industry conference in Florida last month, and it was I who got to ask Alan Greenspan the question, are you surprised that this hasn't spread to the rest of the economy? And he responded, looking directly at me, you know, I'm really puzzled. I would expect, given the large volume, 20% of all new originations were subprime. Many other people are prime loans, but they have adjustable rate mortgages. Their payments would go up, too, with rates. He said he was puzzled that it hadn't spread yet, but I think we're beginning to see that.
Wait, spell it out. How is somebody who doesn't have a subprime loan being hurt by people who did have a subprime loan who now can't afford the mortgage?
Right. Subprime loans weren't all made in the poorest neighborhoods that you don't live in. There might have been a subprime loan down on your block. When the bank forecloses on it and wants to get rid of that house, get it off its books, it will sell at a lower price. All of a sudden, you and all your neighbors realize your house isn't worth all that they thought it was. It's worth less because there's so many houses being foreclosed upon, potentially sold. It means that the lower people who have homes can't move up into more expensive homes, so the home builders are feeling it. The realtors who are out there are feeling it in lack of commissions. Home sales are going down. The median home price has been going down, and that means that people who thought they could borrow against their homes to finance their lifestyles are finding they can't do
Carrie,
it.
we're out of time, but real quickly, for people who have these loans, subprime loans, what should they do?
Okay, subprime loans, if you still have one, go immediately to the bank or the servicing institution, talk to them, tell them you're in trouble. But for all the rest of the people out there who have adjustable rate mortgages, please lock in a fixed rate mortgage now. Same thing, your home equity loans float. Make sure you can afford them if the rates go up, because it's likely interest rates could go up.
Terry Savage, good advice as always.
Thanks.
Good to see you.